Welcome to the Forex Pro Charts weekly analysis for the week beginning March the 6th, 2011. This week we will be looking at the GBP JPY pair. Okay, looking at the monthly chart on the GBP JPY pair, Great British Pound Yen, we can see that it looks like price has reversed after moving all the way down from the upper edge of our trading field. Took over a year, but price moved down to a point about midway in between our weekly armpit and the lower edge of our trading field. And here you see our monthly armpit. So this is the area between the monthly armpit and the solid lower edge of our trading field where we would most likely expect that price would be reversing long term. And although price could still bounce off of this monthly armpit, and we won't be 100% assured we've had a long-term reversal until price breaks that armpit, we do see that for the last 3 months, price has been moving up, and we would expect that we have achieved the price reversal that we would have been expecting in between here. We still, as I said, could see price retrace a little bit or consolidate a little bit at this level prior to moving up and breaking through, but we would expect to see that. So in that instance, even though our 50 EMA is showing down as a trend, many of our traders will be considering the overall long-term trend on the GBP JPY to be an uptrend. And when we're looking for longer-term price movements, we would be looking for buys and to be going with that trend. Okay, now we're looking at the GJ weekly chart, and we can see here that the GJ has formed two new zones, one a resistance zone and one a support zone. Price reversed or retraced just short of this monthly armpit, which is where we would be expecting to see price go eventually, came down to just short of the weekly armpit and reversed again. Now, should price continue to move down, which we don't really expect, but should price breach this weekly armpit and continue down, it's quite a long way, down around 126.00, that we have this support zone, and price is currently at 132, between 132 and 135 something. So we would not expect, even if price did move down, we would not expect to see it reach this lower zone. We could see price come back to this zone and then bounce again, but we'll take a better look at this on the daily chart and see exactly what price has been doing here. As we've said, overall long term, we would be expecting price to move up through this zone, this fairly new zone. And with this zone, if price returns up here again, we'll really only be looking for a fairly small bounce, and we'll be looking really for price to move here. You can see on the weekly chart that when price gets to this support zone at about 136.38, this resistance zone at about 136.38, that we've got not only the monthly armpit, but we also have the rally base drop pattern at the origination of the zone, and that's a strong pattern on the weekly chart, and price moved strongly down quite a ways before retracing on the weekly chart. So this was strong price movement. Price has not yet revisited this zone, and we would expect to see price, when it reaches this zone, bounce back down. These zones I look at basically as little minor zones that are formed from price consolidation or when price is in a ranging pattern. And although we certainly can trade the 20 pip bounce off of these armpits, traders should be cautious, and with these types of zones, not expect the longer term price movement that we might see here, and probably will want to move their stops more aggressively. Sometimes we recommend, where we're looking for longer term price movement, that traders move their stops but still leave a little bit of room in case price comes back to the 60-minute armpit before moving away for good. But with these types of zones where we do have a 3-to-1 ratio, but really this is kind of a ranging pattern, and we're waiting for price to take a direction. So we really encourage you to move your stops more aggressively in these two zones than you would, for example, in this zone or this zone. So let's take a look at the daily chart as well. Okay, so here we are at the daily chart, and we can see price a little bit more clearly. We see that price formed not this past week, but the week before, formed this new resistance zone and moved strongly out of it. And you see here the red painted candle. That's a candle that indicates volume coming out. You can see it does not have the black outline around it. It's just a red painted candle as it comes down. So price moved very strongly out of this zone, came down, formed the new support zone here, moved up, and then sure enough, as soon as it hit this zone, hit the 60-minute and the 5-minute armpit, and moved back strongly down, as would have been indicated by this arrow here. So we're going to be looking at the results of this trade on our hourly chart. It's a very nice trade so far, but if you're looking, you can see that you would expect to see price move down now to this newly formed support zone. And as we said, well, we will be trading the bounce. Both of these zones are really kind of intermittent zones while we're waiting for price to take a direction one way or the other. So so traders want to exercise caution at this zone. However, in this case, we did see a very nice little bounce, and we'll go ahead and take a look at that in a little bit more detail here. Okay, so looking at the hourly chart, we can see here where price moved up to this zone and hit the 60-minute armpit at 134.88. You can see that when price hit that armpit, it spiked up past the 5-minute zone, but then very, very quickly moved down very strongly. And this is a very nice pattern. Very often, or sometimes on the charts, we'll see a pattern where price hits the 60-minute armpit, moves down 20, 30, 40 pips, comes back to the 60-minute armpit, and then moves down 100 or 150 or 200 pips, which is fine, and you get the initial bounce. But sometimes when you move your stop, then it's frustrating because you come back to break even, you stop out, and then price will continue down. In this case, price moved very, very nicely all the way up, spiked through, and then came all the way back down. At this point, when action closed for the week, we had a gain of 122 pips, but as we mentioned just a minute ago, we are kind of expecting to see price move back down to this zone. Again, traders should not take that for granted. As we discussed, these zones are a little bit weaker because they're just kind of what we call temporary zones, and price could very easily turn and move back through. So traders will want to go ahead and protect their profits. You've got a potential 122 22 pips here, so you should be protecting your profits at least a portion of them at some level, so that if price does reverse back up, you will have gotten some benefit out of those pips. But we would expect to see price most likely move back down to this zone and then bounce off the 60-minute armpit here. So that is the analysis for the week of March the 6th on the GBP JPY pair. For more information or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com. We do post a free video every weekend giving you an analysis of one pair. But at our website, for our subscribers, we do analysis for a full 10 pair of currency every week, and then we also, depending on your subscription level, issue trade alerts and provide you the charts to work from. So we would encourage you to go ahead and take advantage of the free 1-week demo that we offer and take a look at our charts and our analysis services. In the meantime, we'll see you back here next week, and good luck trading.